Alrighty, today we're going to talk about Nationwide Care Matters 2 and Care Matters Together. I'm Drew Nichols here with LTC Tree out in San Diego, and I'm here with my cousin and partner, Derek Wilkins. Hey, Derek.
Hey Drew, how's it going today?
It's going good. So we're going to talk today about the two different nationwide policies, Care Matters 2, Care Matters Together. There's a little bit of confusion in the marketplace sometimes about the difference between these. We've got some graphs, we've got some stories, and we're here to kind of compare the two.
Yeah, so nationwide, they rolled out the CareMatters 2 product. It was probably 4 or 5 years ago. And then within the past year, they followed it up with a shared version of that called the CareMatters Together. So we're going to help dive into the details today. What's better for you? Is it better to have two individual policies, or is it better to combine it and have a shared version? So
Yeah, so Care Matters Together came out in the summer of 2023. So I've actually had quite a few clients who were kind of, probing around with this idea prior to that, and we've been able to kind of go back and show them some Care Matters Together comparisons. And you and I were talking before we decided to make this video about this product, and we kind of decided that for a lot of couples, it's not always the best fit. And we're going to kind of dive in and sort of peel back the onion, so to speak, and look into who it is good for, Care Matters Together versus going with the individual plans. And maybe we can kind of talk about the key differences between them.
yeah, so the CareMatters Together product, essentially what you're doing is, say we'll just give some numbers. So say you're comparing doing $100,000 CareMatters Together or $50,000 each. Which is better? It's the same amount of money, but which one's going to give you the most benefit for the dollar put in? So
Right. And
we're
we're
looking
talking
at some
premium
numbers.
amounts. We're talking $50,000 in premium per person, or for a couple, a total of 100,000, just to clarify in case somebody's confused.
Yeah, yeah. Oh, thanks. Yeah. So which is better? So the CareMatters Together, a common way to design that is you be sharing 96 months. So 96 months is 8 years. And a common way for the CareMatters 2 product is where you each have 6 years. So that's the first kind of the length of time. That's the first benefit to consider when you're doing your analysis. Now, the CareMatters Together, you are sharing those benefits, and they will typically start you off with, I don't know, maybe 10, 15% more benefits per month. And that's if you both get the preferred health rating. So Care Matters Together, they have preferred and they have standard. Whereas the Care Matters 2 product, it's pass fail. They're going to take the case or they're not going to take the case. So what we're finding is that for couples who have really good health, that's where it might be in consideration. But if both don't have preferred health, it's probably not going to be the best because they're going to really reduce your benefits. What, by a third? They cut them? Is that it?
Yeah, something like that. Yeah. So we're going to actually pull up a graph, and I'll bring it up in just a second, that shows, an actual couple. In fact, let's do this. Let's see if I can do this. I'm going to pull up a graph that shows this is a comparison of the Care Matters Together in the blue versus we used Lincoln, which is a similar product to Care Matters, in the green. So let's talk about what we're looking at here in this illustration. And what we're looking at is how much of a monthly benefit does the same exact amount of premium buy. Let me just move this around a little bit. And can you see this graph, Derek? Is it showing up for you?
I can see it. Yeah.
Yeah. So what you were just saying is if they're both preferred, that's our far right hand bar graph here. That means both husband and wife have essentially perfect health. And let's talk about what it takes to get that preferred rating in a minute. But this is a very rare situation that there's no medications or just one or two very tiny maintenance medications, no health history. This is putting the absolute best foot forward of the product for a $100,000 premium. This couple, and this was two 56-year-olds, I believe, correct?
That's right. Yeah.
Yep. So two 56-year-olds, they're going to get a monthly benefit that either of them can tap into per person of $29.83. So let's just stop there and you can kind of maybe explain what we're looking at here.
Yeah, so with in the blue, the far right, like as Drew said, you're getting the 29.83 per month in benefits that either you can both be on claim at the same time. That's gonna give you about $6,000 a month. With the Lakin, for example, where you're splitting it up, 50,000 for the husband, 50,000 for the wife. You each have your independent policies, and the husband is going to be, I can't read that number. It's how much is the number?
Okay, so he's going to get about a tad over $3,000 per month, and she's going to get $2,615 per month. Now, these are day one benefits; they're going to go up over time, but because women's premiums are a little bit higher, and because we're putting the same amount of money in for both of them, she gets a little bit less in coverage.
Yeah, so that's going to be again the ideal situation where they both have preferred health, and a lot of times people have blood pressure, cholesterol, so it's not too common where we'll have both who do have perfect health. But if you do have that, that's really the only time that I would look at it is if you both have perfect health. But then the other variable to consider just really depends on how important this is to you. With an individual hybrid product where you both have your independent policies, when one spouse dies, they can leave the life insurance to the surviving spouse. With these shared policies, your death benefit is second to die. And what that essentially means is it's not going to pay the life insurance benefit till you're both dead. It's common where, when one spouse dies, they want to leave whatever money's left to the spouse to help them with their last few years. So if that's important to you, that's really something to consider. And just really remember that the CareMatters Together product, One America, they have a shared product. It's always second to die on the life insurance.
Yeah, and I'm going to show another element of this thing. We're trying some different video formats here. Give us any feedback on this. Because as you said, you've got two life insurance benefits with the non-together plan, whether it's CareMatters 2 or something else. You've also got two long-term care benefits. So that's what we're going to break down here on this chart. And I'll just kind of run through the numbers here. If a couple both get preferred, they're sharing 318,000 in long-term care benefits. So Derek was just talking about life insurance. Now we're talking about long-term care. The total pool that this couple can access on day one is $318,000 if they are both preferred health. In other words, both perfect health. If only one of them is preferred, which is very common, I would say in most couples, one of the spouses is going to be healthier than the other. I see it all the time. They're only going to have a benefit of $205,000 that they're sharing, versus for the same exact money. So cross that one out. Over here, they each have an individual pool over $200,000 in long-term care benefits. I mean, to me, if there's even a chance one of them is not preferred, it's no-brainer territory to look at getting two individual policies.
Yeah, that's true. Yeah, it's if you both don't have perfect health, it's full stop on the shared version. Go with the individual policies, and you can leave the life insurance to each other.
Yeah, that's a huge component because typically, it's not that the life insurance, $50,000, $60,000 life insurance is not going to make or break our clients, but it's nice to know that at least that money can go to your spouse when you pass away, rather than with the CareMatters 2 having to wait till the end. So, I think the key takeaway, and if you're not sure who we are, we're LTC Tree, and we compare multiple companies. We do spreadsheets, we do analysis, and we'll do a lot deeper than what we've done on this video for your individual situation. So, reach out to us. Check us out in the description below this video, and we can do an individual comparison for your particular situation.
Yeah, and just to put a cherry on top of what you just said, Drew, is we're independent, so we work with all the companies. So we'll show you the pros and cons of each product. Our motto of our company is we work for you, not one particular insurance company. So we'll just show you all the pros and cons of each product that are out there, like we just did in this video. Go over the good, the bad, the ugly, and let you judge for yourself which one you feel like fits your situation best.
Perfect. Yeah, the key word Derek said, we're independent. We we write business with all these companies. So we don't have a particular favorite that we're just putting everybody in. That drives me crazy. I know some agents do that in this industry. We're going to show you the whole buffet menu and the pros and cons, because every single plan has pros and cons. So thanks for watching. If you're new to this channel, we'd love for you to subscribe. We put out a video about every 2 weeks. And I guess we'll wrap it up. Catch you later, Derek.
All right. Thanks, guys.